Hey guys, welcome to another video brought to you by Total Control Traders. Before we get started, I wanted to take a moment to thank all of you for your support to this channel, whether that's watching it or commenting or giving it a thumbs up and subscribing. Thank you. We have now reached 2,000 views total. I know it's not a big number, but one step at a time, I think that is very good for coming up the end of the first month by the end of today. And if you like the content that we're putting out, make sure to recommend it to your friends and family. I would very much appreciate it. We're always looking for ways to improve. So if you have any recommendations, we're happy to hear them. Again, thank you for all your support and taking time to watch our videos. Make sure to take a moment and check out our website at totalcontroltraders.com after this video. All right, let's get into it. SPX held that key support, bounce from the support zone and the trend line. We're looking back at the weekly trend line from the pandemic lows. This is monthly. All right, the weekly trend line, pandemic low to the last consolidation, and we bounce from it. Now we are seeing an extremely bullish setup, 4 hours straight run into the previous trend line from the low of this wick to the low of this wick, and we're seeing a resistance on it, 4 rejections from it. However, we are forming a bull flag using this previous resistance zone now as support. We can see 1, 2, support, support, then another third resistance, so key zone, and now we're using it as support. Have not closed under the 4-hour 8 yet, so 4-hour 8 is your guide on bull plays. Market is looking very healthy. RSI is nowhere near overbought. So tomorrow we're gonna want to see a break, or at the very least a retest of this 1-to-1 extension area. That 3862.8 that we rejected from 2 to 3 times before. This is a near touch, so technically 2 rejections. But market is looking bull. Nas, we already went up to touch that previous high, very close to making new highs, but we got rejected from there, and we have lost the 4-hour 8. So a clear, much more volatile move comparing to SPX, coming to the new highs, then lost the 4-hour 8. Nas is looking very strong as well. The consolidation is so minimal. Let's see on the NAS, if we were to, even if we were to come back to the 0.382, not a key zone. There's no confluences. The only thing I can see is maybe here, but this is just one single slight rejection, so I can't really call that a key zone. Regardless, the pullback is sitting around the 0.236. Haven't even touched it yet. 0.236. Okay. So market as of now is extremely strong, even in the after hours. All right. Next, the Dows. Still clear weakness. Starting to see a trend line develop here. 1, 2, 3, 4. 4 rejections, slight break over it, got shot down right after. Now this after hours, there is another rejection forming right now. Dow is clearly the weakest of the 3, and we are going to need Dow to move in order for the market to have a decent bull momentum. Russell seems like the strongest of them all. Maybe not Nas, but we did already backtested 4-hour 8, and now after hours, this is not after hours, apologies. But yeah, we did backtest the 4-hour 8 already. So tomorrow, we're gonna see which direction it's gonna take us. We are seeing decreasing volume, so that is a little bit of cause for concern. Now, one thing that you guys should keep in mind is we are looking on the 4-hour for SPX, and the Russell is very clear that this could be a A, B, and then it's gonna be a C. SPX on the daily, same idea. A, this could be a B, rejection. So tomorrow into Friday, the end of the week, is going to be key to see what this consolidation brings us. Keep a close eye on it. There is still a chance that this could very well reject. Okay. From there, next one. Nothing much going on the 10-year over 2-year bond yields. Hovering just above that upper trend line, still using that as support. Slight break under the daily 8, did not close it, did not close under it, and got bought up. Lots of upper wicks, some lower wicks as well. Looks like it's going to be pinned around this area for some time. Next, VIX. For those of you who played hedges or VIX or just bears, simply bears, I hope you watched the video where I mentioned on one of these 2 days that you want to be taking profits on the way up, because VIX, when the move is done, it comes down just as fast. Maybe a little bit slower, but basically a V, inverse V. You look at any of these previous moves, it's an inverse V, right? They're all inverse V's. Even the pandemic one, it's just a emphasized or a blown up V, inverse V. Okay, and we are seeing that again right now. Shot up, now straight back down. So from here, looking down, back down at that 20 to 21 support. Looks great for the market. No bold divergences yet. Likely to continue to drop a little bit lower. Next is gold. Still in that channel. Slight decreasing. Just about to lose that monthly 8. This is only the beginning of the month too. So this bull flag has the potential to get negated on the monthly now. All right. And silver. Huge upper wick after an early pop. Came back tested the daily 8. Tiny bounce. After hours is still dropping a little bit. Today we're going to want to see that bull volume. Or tomorrow. Tomorrow we're going to want to see that bull volume. Because there's a third, the fourth. Yeah, tomorrow we're going to want to see that bull volume. Because this type of volume, it's okay, but the price action is not ideal. All right, we sold off more than we shot up. So today we're going to want to see that increasing bull volume to confirm bull place. And next, US dollars. Still slow grind up, still above that upper trend line. Looking more bullish than bearish. Remember back here that we said this is likely to bounce, and we did bounce, got shot down, made a higher low back here, but this was a nice area, a key zone that we held because we did not make a lower low. From there, just a slow grind up now. We are seeing a trend reversal on the daily, so that is very notable. And that's why be cautious of your bull plays. US dollar is flashing a little bit of a warning sign. And that's what part of the reason why it brings me to think that this could be a B, A, B, C, further leg down. We never reached those targets, not even the 0.382 that we were looking at. So this brings me to think that there could potentially be another leg down. Watch for the pop. If US dollar pops, market likely to follow inversely in 2 to 3 days is generally. Generally it's about 2 to 3 days. All right, next, Bitcoin. Broke that bull flag. Was it weekly? Yep. Weekly bull flag confirming. Still having trouble over this key resistance that we got rejected from 1, 2, 3, 4 times before. Seeing a wick right now. 37,860 key to break. Once that breaks, then we're looking up at 40,112. From there, we're just looking at up at all-time high. So not much resistances. Chart is looking very great on the weekly perspective. Bull flag confirming. Three days. Okay, so we still got over half of the week left. So over half. Looks like it might be a decreasing volume. And if this week confirms that it's going to be a decreasing volume, we're likely to have trouble at the new all-time high, which is 42,000. Haven't looked at this in a while. Let's take a look. Oil, still ramping up. Okay, didn't really play out exactly, but we actually somehow forecasted that bounce. Didn't come down to the 88 or the support, but bounced right from here. Interesting. A little bit earlier too. Oil breaking bull. Great sign for recovery. And we're back at 50 some dollars already. Wow. Been a while since I checked the oil. No wonder the other day I was at the gas station. The gas is back up over $1 already. Oil is up above 50, eh? Looking like great bull momentum. Slight bear divergence, but we can see that it sort of just negates all the time. From here to here was just bear divergence, negated again, very slight pullback. So oil is very bullish. All right, that's it for the market. Let's get into the hottest tickers. First one, Tesla. All right, so high chance. Now the chance has become a lot higher for this to form a pennant now. In our video yesterday, I mentioned that the volume is not convincing enough for us to go make a new high or even to meet to break this previous high. Volume's not convincing enough. And today was key to see which direction we're going to go. If we don't see that increasing bull volume, likely to start rejecting. And we did see that rejection begin. Still above the 4-hour 8. Seems like this one might be a bit harder to draw. That looks a lot better. All right, let's see if there's bear follow through tomorrow. If there is, we're going to be watching this lower trend line. Yeah. Anticipating some sideways action on Tesla. Amazon. This is just sad. Amazon, like, this is just sad. Seriously. Such a nice earning, such like 100%, near 100% surprise of what analysts expected. And yet, I'm still thinking it's because of the Bezos news. Look at this selling. All day, man. 7:30. 7:30 we had a pop. From there, dropped. And we had a second pop that was actually on decent bull volume too. Increasing as well. Then from here, saw decreasing and less in comparison bear volume to the previous bull volume. However, then we started seeing increasing bear volume. People wanted out. The break with this move, the break of the support zone was the sell sign. Depending on how you're playing it. Yeah, this is just sad. The chart was so ready to go. The earnings was so ready to go. Everything was lining up. Can't believe this. Man. And this is why we trade. You know, market will always find a way to humble you. Even when you think, when you know exactly what you're doing, or just when you're starting to think you know exactly what you're doing. All right, so from here, potential trend line. No. Yeah, potential trend line. Ideally, tomorrow, we want to hold that upper trend line of the wedge. If we lose that, we'll be looking down at this lower trend line from the two lows, the two previous lows. Overall, huge selling pressure after this indecision big bull volume. Chart is looking weak. Yep. Next, space. Finally, a chart that's looking strong. Daily, I believe we held that trend line. Yep. So it came back test, slight bounce, back test, bigger bounce, come back test, did not close under. Now a big bounce, follow through. Unnoticeable more, I wouldn't really call this increasing volume, more volume than the last three bull moves. There is a lack of sellers. Look at these bear volumes. It's nothing comparing to the bull volumes. Chart is looking strong. Key to break 59.40. Then from there, are we in blue skies? We are looking at blue sky continuation. Space looking bullish. On the daily, lack of bear volume. Watch for the double top though, because bulls, we are seeing decreasing bull volume as well. Potential increasing on bear volume. So watch for the double top, watch for a reaction around that 59.43. Next, PLTR. Another sad chart. Look at these volumes. Clearly outweighs the bear volumes. Had a really nice move up. Move to the 1-to-1 extension. Congrats to all those that caught it. This was a beautiful move. Now we're seeing low volume consolidation, which is very ideal for the bulls. However, we were unable to hold that daily 8. So now we're looking at weekly. Still above that weekly 8. No bull momentum though. 5 straight days of red after 4 days of pump. This name is a little bit hard to trade. We want to hold this key zone of support 31.19 to 33.50. As long as we're trading down under the daily 8, this chart is not going to be of interest for me. Weekly, we are still above. Understand that. Seeing all these upper wicks, I would anticipate can see a key zone or a key price that would potentially require a back test at 27.66, because we can see here the highest close shot over but closed under, shot right back down the week after, resisted again or rejected again, same thing, opened up above it but then shot back down again, closed only very slightly above it, shot back down the next week, bounced from the weekly 8, bounced from the weekly 8, rejected from that area again. Then when volume on the third increased volume, we finally broke over it. So 27.66 seems like a reasonable, a noticeable price of rejection, and now we're gonna have to want to see that converted into support. Keeping an eye on that price area would be potential ideal for entry. Let's see. It does not confluence with anything though. Yeah. If you do get in here, there's not really any, or near here, you're gonna have to use this price or the low of that day as your stop, and it's not gonna be an easy trade, put it that way. No clear levels. This one could be the other one, 29.05. So 27.66 to 29.05. If we lose the current zone, that'll be the zone we're looking at. Next, Zoom. Just disappointments across the board. Disappointments across the board today. Zoom, thesis still in play. GP, must hold. Looking at a bounce from 0.5 ideally, which lines up with these previous supports. I want to see that bounce from 0.5. This is not ideal. Finally broke over the trend line. Wasn't even able to come back up above to a new high before making a higher low. Now bearish engulfing, near matching bear volume, not ideal. Tomorrow, want to see that reversal. 0.5, around 376.83. But key to hold is GP, 371.51 to 372.67. That is it for hottest tickers. Now let's get into some requested tickers. First one, ACB. Marijuana sector, running like crazy. ACB is actually one of the lower movements. Okay, it's decent. 8%. Yeah. Looks like a long-term wedge. Potentially a long-term wedge forming. Let's see how this draws out. Okay, so we're just about breaking that wedge. On increasing volume. Popped increasing volume. Tomorrow is key to see that break. We want to see that break tomorrow. If we see a rejection, that is a red flag. On this kind of pop volume and second day increasing, we want to see a break of a key resistance, especially if we're right on it already. After that, key level to break is 14.48. Chart is looking bullish. Reminder, there is plenty of resistances up ahead. Just think of all the bag holders that bought up here, bought up here, bought up back here. You know, all those, actually these ones would have sold, but bought up here, here, all the way along the way down. There would have been a lot of people who are still bag holding. So as we come up to the resistances, it just becomes multiple resistance after resistance to break. However, trend is in the favor of bulls, and current volume is in the favor of bulls. Earnings is coming up February 11th, so remember that. Know whether if you want to play earnings or not. Just look at Amazon. That's a perfect example. You know, it's very widely anticipated that Amazon should have a good earnings for the last quarter, and they did. However, they come out with bear news, and that just crushes it. So always know whether if you're playing earnings or not beforehand, and especially if you're playing options, know that the IV would have already been spiked a week or even further out beforehand already. So earnings is the 11th. IV is likely already spiked. Likely started spiking back here or even a little bit before. So unless earnings blows it out of the water, whether if you're playing puts or calls, blows it out of the water one way or the other in your direction, unless that happens, return is likely very low or going to be a loss. Anticipated move. Make sure you check that out before entering options for earnings trade. Right, next one. For some reason I have PLTR. One sec, guys. Okay, already covered that. Next one, SRNE. All right. Nice popping volume. January 27th. Nice low volume consolidation. A little bit lacking on the bulls, but still looking at that formation of bull flag setup. We see a bull flag setup back here. Volume came in. Pop. Similar back here. Bull flag setup. Volume came in. Boom. This is going to be a little bit harder of a chart to trade. It is a smaller cap. Clear trend line to hold. And clear resistance for now. Volume is not exactly that convincing for a break of the wedge. So in order for us to see confirmation of this break of this upper trend line, we're gonna need to see equivalent or higher than this day's, the January 27th bull volume. We can see previously there's been much higher bull volumes and bear volumes. So if that doesn't come in, we'll likely see a rejection from here, come down to visit the lower trend line again. Let's see if there's a key level to hold up here. Yeah, I see 1230. Yeah, this level somewhat makes sense. 1230. Use the daily 8 as your guide, or 1230 is a must hold. If 1230 does not hold, we are looking down at 6. Oh, that's a big difference. Yeah, if 1230 does not hold, you'll be looking down at about 850. key price 851. Because if we do lose this zone, makes sense that we're gonna, if the consolidation is dragged out, makes sense we're gonna come here to backtest somewhere around here. Confluence area, we'll likely see a bounce from there. If you're not in the trade, most ideal entry, be patient, wait for this lower trend line, and key previous resistance, backtest, use that as a support. All right, LMD. LMT. LMD or LM? The request was for LMD, but there is no LMD. All right, well, let's cover LMT. I'm gonna assume that it's LMT because it seems like this ticker was requested before. Increasing bull volume on the daily. Long-term downtrend. Held that 88 today. We've had one hold before as well. Volume's noticeably different than the previous hold back here. Earnings slightly lower. Yep. Could be looking at a reversal. Daily no divergences. 4 hours. We are no divergences either. I see a trend line, but it's kind of choppy. Yeah. Megaphone pattern. Something like that. Slight megaphone. On the hourly, no bull divergences either. So if you're looking for, all right, so what I'm doing here is on this type of long-term downtrend that's clearly getting pushed down consistently, if you are looking to play a reversal, unless ideally you want to find that golden setup. Okay, what that golden setup means is double, best, triple, even quadruple confluence zone, whether if it's a trend line, fibs, support, or previous resistance, and triangle, wedge, however you draw, whatever you use to draw, find a confluence zone. If there's multiple confluences, that's a golden setup. On this one, you're trying to play a reversal that's clearly still within that trend. It could very well be the bottom. I don't know. Volume is saying that it could very well be the bottom. But from what I'm seeing here is we are still in that downtrend. And let's draw on the daily. Yeah. So it is a channel on the daily. We are still in this channel. Your first sign of go signal is a break of this channel. But looking at the previous breaks, you want to be very careful on upper wicks. If you are seeing upper wicks forming on the break, on bear volume, that is a no-go. These last 2 days bull volumes are promising. But remember, make that easy money. This, if it gets shot down, will come right back down to a much lower price. Other than that, I'm not really seeing any noticeable zones. Let's see if this works. No. Yeah, watch the channel. You want to watch for the break of the channel. All right, gonna keep it at that today. That's it for today's video. Thank you for watching the video. Again, thank you for everyone who's supporting the video for us to reach where we are now. And we are seeing a slight increase on subscribers on a daily basis. Again, thanks to all of you. If you're looking to get out of debt or build that first pot of gold, make sure to hit the like and subscribe button in order to get updates on our new videos. Also, check out our website at totalcontroltraders.com. Stay safe and be in control. I will see you in the next video. Thanks for watching, guys.